On Wall Street, the S&P 500 index opens at a record high this morning, but millions of potential investors are not sharing in the gains. A new survey by the investment firm BlackRock finds Americans have $10 trillion in low-interest bank accounts. The survey also shows Americans spent more time planning vacations and purchases like smartphones and cars rather than planning for retirement. Robert Kapito is president and co-founder of BlackRock, one of the world's largest asset management companies. Welcome.
Thank you.
So why are people saving so much in this country?
Well, people are not saving enough, and they're not investing enough. So we have over 10 trillion, as you said, sitting in cash. And unfortunately, more people are going to be turning 65 than ever in history over the next 10 years. And on top of that, they're going to live longer. So we did a survey because 2/3 of the assets at BlackRock are retirement assets. Right. What are people doing? They're not investing. You can invest for the future in the future. So this was very surprising. The average person has less than $25,000 for retirement. Oh. That is not going to be enough.
How much should we have?
Well, it depends how old you are, of course, but if you're turning 65, the number is about $500,000. And in fact, what we're trying to do is educate people around the world, and we created a website which you can get on, determine actually what you need per month once you're 65 or older, and it'll tell you how much you need today, or you can go in and put in how much you have today, and it will tell you how long that'll last month by month. And this is very important that we get this message out that people need to invest now, because in this survey, the one thing we have found, and this is where wisdom comes in, is every one of these retirees said they wish they had saved more for the future.
It is worth reminding, because as your survey pointed out, people are spending more time planning vacations and thinking about which smartphones to buy, which cars to buy, than they are about their retirement. How often should you be thinking about your retirement and planning for that?
Well, this is very important that you get invested today. The earlier, the better, because the money will work for you. Because so much is sitting in cash earning zero that over a 20-year period, just with inflation, you will lose half that value. One of the other things that was really interesting in the survey, the people that are most concerned are 45 to 55. That's when people start to say, wait a second, I better look at my bank account and think about retiring. Earlier, they're not thinking about it, and even later, they've already taken care of it.
Well, what about those people? Why are they keeping their money in cash? Because they don't trust Wall Street.
Well, one is over the last several years, people have lost a lot of money in the market. However, waiting in cash is not the answer, earning zero. The market's up again this year. It was up last year. So you've missed 2 years, and it's really hard to make that back, especially in a very low interest rate environment. So we need to bring that cash out in a less risky way where people can earn a better return than sitting in cash.
Okay, but it seems to me that the question is people who are sitting on a lot of cash may be not sitting on it because they don't trust either investments or what might happen to it. But you're arguing that there's a better way to do it than simply sit on cash, because they may believe sitting on cash is saving it and preserving it.
Yes. Now, there is a better way than cash. There are certainly ways to invest in the equity markets with large cap companies that pay good dividends, and even a company that's paying a 4% dividend. Remember, you're getting 4% more, but you need to use longevity. So you need to use that as a tool and invest for the long term. So where people get confused, it's not timing the market, it's time in the market. So they should use this longevity to their advantage and get invested. They're not day traders. They shouldn't be looking at the markets every day, but invest in good companies that pay a dividend over a long period of time. So there are many tools that you can limit the risk, but at the same time, really help yourself for the future.
So take your money out underneath the mattress, find a good financial advisor.
Exactly.
Go get my shoebox.
Exactly.
Thank you, Robert Kapito. Good to see you.